All right, let's do this. It is Tuesday, February 17th, 2026. Let's start with the S&P. So we had market open kind of broadly flat, if leaning on the weaker side, and we did print a new cycle low of 67.75. That is for the bulls. This is bad. This is not good. We're these lows are not holding. 67.80 gone, 67.89 gone. This is bearish. Now, we did see a latter day recovery because momentum turned positive. Not surprising. But look at this. Look at where we stalled. Two little spiky candles from 68.66, which is a key price threshold that goes back a couple of weeks. And we have upside resistance to 68.80. I don't think we're going to be getting any closes above 6,900. That just doesn't look viable now. I mean, my guess is for early Wednesday, I think we're going to maybe have a little bit of upside at some point tomorrow and then get stuck somewhere around here. So we could be up 30, 40, 50 points tomorrow and then roll over again. The only issue, from my perspective, is do I feel bold enough to short that? And ironically, when I'm thinking about it now, where did I go short last time? The last short I tried was there, like on Friday morning a week ago, right? It just kept going up, which was bad. I mean, actually, I went short there, bailed there. So I kind of I capitulated before this lunacy, right? I got out before all that, and then, but neither was I short here. But this isn't great. Um, yeah, so bullish a little bit for tomorrow, but I think more broadly we're going to be going down. If I jump to a weekly candle, because otherwise I'm not going to highlight it later. I mean, look, I think we have a pretty good chance now at 6,600 here. Clearly not this side of OPEX, but maybe even next week or early March. So in 6,600, that's 240 points down. That's 3.5% or so. That looks realistic. That target would only be dropped if we have a close above. Yeah, I mean, look at that. Look at the 10 MA on here, 68.99. So unless we go back above 6,900 and hold it, I think the market is distinctly short-term broken. All right, moving on. Let's cover some individual stocks. Let's start with Apple, which was up and had a pretty strong day. Let's talk about a event on March 4th. So that's why that one was up. We're gonna fly through some of these because I'm tired. Actually, oh, do I even say this? I fell asleep earlier for 10 minutes, then I woke up wondering what day it was. I thought it might be early Wednesday. I was so tired. I literally lie down for 2 minutes and I'm asleep. I I think I was talking too much today. I'm exhausted. American Eagle down 2%. Bears can argue structure is a multi-week bear flag offering 20 to 19, maybe even for 200-day in the 18s in March. So yeah, possibility of 18. I like the company. I like Miss Sweeney. Not a bad actress, actually. Yeah, she was in. I saw her in The Housemaid a week ago. That was a pretty good movie. Freeport, correction. First Majestic Silver AG. So yeah, down 6% because of commodity silver was down. AMD down 2%. I'm starting to wonder about 150 in March. I mean, look at this. We have a clear double top. 267, 266. 150 would be the natural target. Amazon. So ended on a positive note, but again, that's a lower high. Question, a lower low. So maybe a little bit higher early Wednesday, but then rolling over again. The monthly chart looks horrible. Barrick down 2.6% because of gold was down. And we're gonna fly through these because I don't have the time or the energy to cover these. Kimiko, yeah, bouncing around. Cleveland Cliffs, I mean, up 1%, but this is horrible. This is horrible. There's nothing good there. Coinbase trying to bounce, but again, I mean, If you think if the S&P cools into early March, I don't think Bitcoin can hold 60K, in which case it's got to go down to 50 to 49. Again, even something like Deckers, you think, well, maybe Red Gap will fill. That one's filled. But yeah, Disney, which was stock of the day, in my subscriber post, down a penny. I mean, look, you see, we had a really good bounce last Friday from support. That's great, right? That's good. But it's like, hey, this big old gap to 91, this is probably got to fill, right? I think it's got to fill. Moving on, stuff it just don't have the time for. Google, I mean, look at this. This is day 9 down of 10, down 1.2%. Today's candle is a reversal, so that does lean bullish for Wednesday. But I'm starting to think orange gap. Again, if you listen to me in the morning on my space, which I thought was pretty good, um, I'll highlight the monthly chart of Google in the morning on X. The monthly candle is horrible, bearish engulfing. In theory, yeah, orange gap. Whether that's March or April, I don't know. Home Depot struggled, down 2%. Earnings are probably going to be next week. Heckler had earnings in after hours. They were good. I think their EPS was 20 cents versus 17 expected. They're doing fine, of course, because silver's been sustainably high since across Q4. But yeah, down today 6% because of silver. We will get to silver and gold at the end, of course. Joby churning around. I'm starting to think that this could have come down to the 7s or 6s. I like it for the long term a lot. JP Morgan, Friday had a reversal candle from the 200-day, bouncing up 1.5%. So that's a good bounce, but if it loses, let's be quite clear. If JP Morgan loses the 200-day, target will be around 250-ish, which is about 15% down. KKR bouncing as well, but again, the private equity stocks look problematic. Man, dead cat bouncing, not great. Meta platforms struggling. MP materials struggling. Look at this actually. Look, held for 200-day. It's brief pierce of a 200-day. I think we're going to fill this red gap. I think this is a $30 stock. I think you could have a massive washout in March or April for $30. I mean, that's a long way down in percentage terms. We're talking like 40, 50%. I could understand somebody having being long with a stop at either 200-day or 49. But if a 200-day does go, then that would suggest that 49 will not hold and will go down to maybe 30. I like the company for the long term. Netflix. I mean, look, what was that? A black candle? No, it wasn't a black candle today, but you know, it's not good, right? A couple of churny days and then down again probably. Nike, solid gains actually, 2.7%. That's one bright spot there. Momentum has turned positive. NVDA, choppy. Again, if a 200-day fails, then we're looking at 150. London's almost 8% gains, bouncing. You could argue, bears could argue this is a bear flag on a daily. If it is, what are we looking at? 6, 5, probably 5. Based on structure, we're looking at least 5. I like the company for the long term, but short term it looks vulnerable. Pan American Silver down 3% because of silver. Again, it's pierce of the 50-day. Not great. Palantir, a vein bounce, 1%. Uh, Basically, we've already basically tagged one target, 125 threshold. Next threshold is 100. I think that looks realistic in March or April. PayPal 1.3, but look at that. Today's candle's spiky. The sell is out there on every little bounce. Oh, great. Transocean cooling back. Rocket Lab up 3%, but the problem is the main market in my view. SMR, chop. Target. What is that? Oh, look at that. It's a, is it a black? It is a black candle. It's a black candle around this key price threshold. Bearish. Tesla, 1.6%. Not great. You got this little gap here. 348. That looks realistic in March. Take two. A vain attempt at the bounce. Again, I'm very disappointed after the videos I've seen. Grand Theft Auto 6 looks like it's gonna be a woke mess. Airlines were strong today, up 4%, but they've been pretty choppy for a while now. UPS down 1.8%. Looks like we have a short-term high marked by a bearish engulfing candle last Thursday. Yeah, yeah, we're breaking back down. Probably going to test the 50-day, which will be around 108 in early March. I like that one for the long term. Exxon, third day down because of oil. I think, is that all we have in there? Yeah, okay. Let's just check Bitcoin briefly. Bitcoin down 1.9%, 67K. It's a mess. If 60K goes, in fact, we'll just jump to a monthly chart. Look, if 60K goes, then we're looking at 50/49, last printed in August 24, not 25, August 24. That would really spook people. Yeah, I'm kind of thinking that's what happens. I mean, look, on a monthly chart, right? There's zero sign of a floor here. When we're trying to spike from support, right? You can see the spike. But if the S&P gets knocked down, if the main market is weak into March, uh, it's not going to hold, is it? In which case we're at 50K or so. I don't like it. Anyway, let's conclude with the beloved silver and gold. Yeah. All right, we'll start with commodity gold on a daily. Down $176, 3.5%. You could argue this is a baby bull flag. It is. Structure is a baby bull flag, but I don't like it. I think we've had one wave down, we've had a choppy ABC up, and we're going to get some kind of C wave analogous to that and get us back down to at least 4,400. Most bearish case would be 4K. I don't think we're going to get to 4K. It's possible. I mean, 4K is going to be where the 200-day is in March. I will note, and I should note, the weekly chart momentum is started to accelerate to the downside. So we've been going up for a few weeks. Actually, we've been going up for what? Yeah, we've been going up for 6 weeks in terms of momentum. We finally have a full rollover. I think we're gonna tick down into next week, right? 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 We're going down into next week. We're gonna get back down to here. So what are we looking at? Probably testing that low. 44. I think we have a good chance at 45 to 4,400 next week. Bearish. Silver. I need to make sure I remember to cover daily too, because that's important. So silver, commodity silver was down $4.59, 5.9% to 73s, 37. It's an interesting number. This is not good. There's nothing good here. This is the lowest daily close. Actually, that's not true. Well, there was one there, but I'm always twitchy about highlighting these charts because for instance, this spike is overnight action. So overnight, silver had a low 63.99 back here, but not in the cash market. On a weekly chart, this is a fourth consecutive weekly decline. Look at this. This is what I was droning on about last Friday and across the weekend. Look at this. We haven't had momentum. It's not negative yet, but it's borderline. At the current rate, it will turn negative as of next Monday. We haven't had momentum turn negative since last May. May. So there's the overnight spike low, 63.99. You got to wonder how low can they drag this? Can they get it all the way back to the overnight low, the 54s slash kind of 50 area? Remember, look at that beautiful bullish pattern. When we sure as hell don't have a bullish pattern, right? We're going down. We're going down. You got to wonder how long they're going to take it. I don't know. All I do know is that this is telling me I have no business buying silver at this time. This is bad. This is when you get a bearish cross, this could continue down for a couple of months. I don't think it will. I think it's going to level out after maybe. And you think where can we go? March level out maybe here, mid March, April. Again, just because this goes down doesn't mean price. Because we get a price could just go sideways for a couple of months. But this is not this is this is a sell signal. It ain't a buy signal, is it? You know that. The one thing I do want to remember to highlight is this. This was something I was highlighting on Friday. Last Friday's candle, black, down, played out, right? Another black candle that played out. Incredible, huh? Black candle last Wednesday. The next day, silver was down 11%. Friday's black candle played out. Silver down officially 4.8% for SLV. Every time you see a black candle, you should be somewhat twitchy about the fact that the next day might be down. Look at this one, black candle. We had two of them there, and then on the Thursday, silver was down 16%. So again, I'm wondering how low can we go? You think this low's gone? We actually broke under 65.51 today. We got to 65.14. I think where are we going to go? The Bollinger's offering 56s. So there's another $10 down here. Another 10. And you think, well, that's ticking down, right? That Bollinger's going to be down to around $50 by what? Actually, by the end of this week. I mean, in theory, you think $50. How quickly could we hit that? I mean, in theory, we could do it by the end of this week. I don't think that's realistic at all. But late next week, maybe early March. Yeah, I mean it's absolutely viable, which would be a much better position to be buying at. So I've done it again. I've managed to sidestep this and avoid another 5% down. Again, the lower this goes, the more comfortable I will be to buy it back. I mean, I've been trying to trade, and I have been. I've been trying to trade these little bounces, but I'm like hyper cautious. So yeah, black candle played out, huh? Pretty good. When these things kind of play out like that. I mean, I don't highlight them for no reason. So yeah, I am short term. I would say I'm net bearish equities into March now. I don't know if I want to take a short index position. I might do. I really should not be buying silver until equities, or at least down to let's go back to that S&P weekly chart. Actually, we'll go to an elder chart. See if we get a red candle. Look, yeah, look at this. Look at this. We have two red candles on the elder chart. We haven't had two red candles on the S&P chart since March of 25, right? You see, when we had one there, we had two there. That was a fake out in August of 24. But yeah, when you get a couple of red candles, don't ask me about why is this candle red and not blue. It's not about the fact that we're actually up. It's the way it's just calculated. But you know, lower Bollinger, Well, 65.99. Let's jump to the other one. I think the market has a problem. 65.99. That would be the first support. If you go back to here, you sort of mark. You see, look at this. Look at this. Chop, 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 chop. Leaning over. You see the candle. See the way it spiked from the lower Bollinger. We had an initial spike, just that little bit there, and then we broke down another lower low. And then what's this? What is this? That is a multi-week bear flag, right? Very clean as well. Nice little bear flag, and then smash. Of course, then we had capitulation when Trump reversed his stance on the tariffs, and off we went. It is quite incredible. We have not had any kind of real proper correction since this. I do have a fib chart. Yeah, look at this. Yeah, yeah, check this out. I mean, on a fib chart, a really basic fib would be 64.90 or so. 38% is 61.70 or so. Again, stock charts has problems in trying to nail the exact number. It's very annoying, but just rough. Again, I wouldn't get too finicky about precise numbers, but a pretty standard retrace after a big old wave would be 38%. That gives you 61.70s, which is around the old high in early last year. But anyway, first things first, 6,600. And yeah, we'll leave it on that chart. On that note, I wish you a good evening, and hopefully Wednesday will be pretty interesting. Should be. There's some earnings. There's some Fed minutes are at 2 o'clock tomorrow, and before you know it, it'll be the weekend again, and that is a good thought. Good night.